Hi, this is Kerry Artek with Wicked Stocks bringing you your weekly Mag 7 update. I did record this video on Monday. Well, actually, I recorded it on Sunday, January 11th, but it is for the week of Monday, January 12th, 2026. I start with Microsoft. This is big picture. We've got a 4 or 5 year channel top, really a band of channel resistance between 553.39 and 579.29. That's held nicely, obviously, July and then again in October. We have fallen away. And from here, you must allow, and I use the word allow very deliberately, not anticipate, but allow for the rising channel bottom at 387.31. And you just kind of look at history. I mean, we did this from November of 21 to October of 22 roughly. So this is a 1 year sell-off. 1 year from now would still take us, into the middle of 26. So not 1 year from now, 1 year rather from this high. So, this is just sort of speculating what is the time horizon for potentially reaching 387.31. We do happen to actually be in a sell signal following the testing of this long-term resistance. We did about 2 months ago close below this horizontal channel bottom that is this week at 489.84. This is sellable resistance, and below which, believe it or not, we are still anticipating the mid to upper 420s. 425.36 is a downside 5/8 Fibonacci from that April low against that more recent July high. And 427.44 is a full channel extension. So if you take this channel and you double it to the downside, then you get 427.44. It's a targeting mechanism that works pretty well. And so they correlate pretty well. The question is, how soon might we see this area? And the low settlement price that was put out a couple of months ago is 472.12. And I say that if we close this week below 472.12 on Friday, then we may just be a couple of months, 2 to 3 months at the most from reaching the 425.36 to 427.44 area. You may be short. I've been mentioning that if there's any position to be made in Microsoft near to midterm, it is short below 489.44. 489.84, anticipating the mid to upper 420s. So if you've yet to do that, and we do close Friday below 472.12, that is your next opportunity to play the short side. Until then, closing back above not only 489.44, but also I would like to see the high of the low at 492.63. So closing above this range actually does pivot the market north as we move into February, March, and even April. Within 2 or 3 months, we should push back into this significant zone of overhead resistance in the 550s, 570s that can contain annual highs. On to Meta. So Meta has been pushing through this descending channel top that goes back to the August high for the last few weeks. Last week, we did it by a more significant basis. In fact, if I look closely on this chart, I actually don't think we closed above this channel top until last week. We certainly pushed through it, but we kept closing at it. This week, last week, we closed not only above it, but also higher on the week. So I do think we're beginning to skew upward from here. I don't see a compelling indication for a protracted rally as we move into February unless we now close above 673.42, which is that high settlement price going back to December. If we close above that, then I think we continue higher. And I'm going to move on to the next chart to show that. There's a 5/8 upside Fibonacci that I would consider to be roughly a 2 to 3 week target. If we close this week above 673.42, that's a solid 2 to 3 week swing trade. But I also think over the next 2 to 3 months, we can see the mid 780s to mid 790s again. We could double top here on a monthly, possibly quarterly basis. And longer term, while I don't have an indication for 886.66, it would be a settlement obviously above 796.25 above this high that would then set up 886.66 within another 2 to 3 months where we actually could place a 26 high. So there's that. So upside looks good. I don't have a problem accumulating a long position right now, but then you go all in with a settlement above 673.42. Going back to this chart, if we were to fall back this week and close back below this descending channel top at 629.35, that would also be below last week's low, and I would see this market then continuing south to 560.68. So closing this week below 629.35 is a short play over the next month or two down to 560.68, where we actually could bottom out into possibly through the second quarter. On to Google, or alphabet, symbol GOOGL. So I'd mentioned here we had this sort of vertical move that paused, obviously, for the last month and a half, 2 months. And I'd mentioned I was not interested in playing the short side or exiting a long position in Alphabet unless we closed below this gap. And we never did close below it. We came close. This particular week, about a month ago, was 307.16, and the gap was 306.42. So it was an opportunity to buy this market again, despite this wild swing. And now we've actually pushed on to new highs. We did not close above the high that was 328.83. That was put out back in November. But we did push through it, and we closed just below it. And I just see the likelihood for higher trade now. New high, all-time high settlement. This thing can keep moving northward. There's no good reason to try to pick a top in Alphabet. I could do wave counts and different fancy stuff that I employ all the time in our, say, our daily SPY, our daily Triple Q, and our daily NVDA analysis that you find on wickedstocks.com. Also in Tesla that we put out every day on our free YouTube channel. But this is broad brushstroke. Bottom line, don't be short Alphabet unless, well, I'm going to move on to the next chart. And that's actually what I'm going to show here is a newly formed, mostly horizontal channel bottom. This is a classic sell signal if settled below 297.45. But until then, this is an aggressive bottom picking zone if given the opportunity. Holding above this structure will keep new highs in play in the coming weeks and months. If we did close below 297.45 over the next, say, 3 to 5 weeks, we probably have a good high for the year. And I would expect this could be a 1-month crash. This could also be a probably likelier, as this is about a 2 to 3 month rally right here. We probably give it all back in about 2 to 3 months. So closing below 297.45, bearish continuation into the second quarter. Within 2 to 3 months, the 228.82 channel top anticipated, where we actually could bottom out through the rest of 26 and then round up again. On to Amazon. Amazon settled above this shelf area. Basically, it was the low of the high, and this is a sign of strength. We've not been bearish Amazon. We would have gone bearish. In other words, recommended a short sale or exiting a long position if we had closed below this channel bottom at 222.53. This is an 8-9 month structure that does represent a bull move off that April low that remains intact above 222.53. Last week's settlement above 238.49 indicates more where that came from, anticipating, this could be this week. 256.20 is this mostly horizontal, slightly rising channel top that we certainly pushed through back in November. And it can contain buying into February. We could fall away from here. If we were to close above 256.20, and I say be careful, we're attacking this channel top again. This was your opportunity. The first time is a charm. Oftentimes, the short sale. The second time is, each time you retest it, it weakens just a bit. And one of the reasons why I seem to be implying for a possible violation of 256.20 is because we have a correlation right now of 2 significant channel tops. We have an 8-month rising channel top that is correlating nicely with this 3-year channel top at 275.43. So I'm not about to say that you should go long above 238.49 over the next few months, expecting the mid 270s. That may happen. If you did go long last week following the settlement above 238.49, because we have been mentioning how it would indicate 256.20 anyway, you may exit only some perhaps at 256.20. Hold the balance. The settlement above should result in this 275.43 within about 3 to 5 weeks or less, where yes, we actually might place a 26 high, a quarterly high anyway. Downside, I'm going to go back to this chart. If over the next month or so, it doesn't look inclined at this point, but if we did close below 222.53, we've got a good high through the second quarter. The next 3 to 5 months or less likely to fall back into the upper 170s, where an annual low can be placed. Apple. Apple we cover every single week at wickedstocks.com, part of our subscription platform. So I keep it pretty light in terms of, our defined support and resistance. This is just big picture, broad brushstroke analysis. I have been mentioning on this Mag 7 update, and certainly within the wickedstocks.com Apple stock video analysis, that this 284.37 5-year channel top is a great short play. At the very least, it is an opportunity to exit a long position and then just sit on the sidelines. And sit on the sidelines has been a good move. Also, playing the short side has been a good move. We did have a sell signal about a month ago below the steeply rising channel bottom. I do have an objective, and I'm not going to show it because I don't want to, it's just not fair to our paid subscribers. There is a meaningful line study coming up that may well contain selling through February trade that we're not far from testing right now. There's more downside to come, but not a lot more before we test it. But overall, in terms of the big picture, I've also said on our wickedstocks.com platform that holding below 284.37, now that we've tested, you must allow, not necessarily expect, but allow 189.50 5-year channel support. Now, we've been trading inside of this area for a long time, and it wouldn't surprise me if by the end of 26, we find ourselves in the 180s, 190s, low 200s before rounding up into 27. On the way down, 214.82, solid support that may contain monthly selling pressures. Now for the upside. If, and it's not going to happen this week, but if over the next month or so we do close above 284.37, we enter a whole new paradigm for Apple, which is to say longer-term bullish continuation over the next year, two at the most, 383.65. On to Tesla. Now you can see Tesla, watch Tesla for free every single day on our Wicked Stocks YouTube channel. But this is just a reminder that you could actually go there and watch a more detailed video. But this is part of the Mag 7, so here we are. 402.48, this channel bottom able to contain selling not only through the rest of January, but also through the entire first quarter. From here we can round up within 2 to 3 months to 6-year channel resistance at 532.17, where Tesla actually might place an annual high. On the way up, we do have meaningful resistance at 473.82. That is the low of the high. We gapped below that a couple of weeks ago, continued south. It is a ceiling that can contain weekly buying pressures, and we can fall back to 402.48 from there. Closing above 473.82, I give it about 3 to 5 weeks before reaching 532.17. Downside, if over the next few weeks we close below 402.48, that pivots the market south into the second quarter. 2 to 3 months following, we should see 307.85, where it actually could bottom out, not only on a quarterly basis, but possibly through the rest of 26. And on to NVIDIA. NVIDIA is part of our wickedstocks.com subscription platform, daily analysis in NVIDIA. We used to have it on YouTube. It now is part of our Wicked Stocks, Triple Q and SPY analysis on a day-by-day basis. NVIDIA is part of that. But I can show the big, broad brushstroke, which is to say this is a weekly chart. 175.48, 8-month channel bottom may contain selling through the rest of the first quarter, and above which we can push into this 219, 228 region over the next 2 to 3 months. On the way up, we have 203.42, an inside channel that may contain buying on a weekly, possibly monthly basis. We could trade inside of this band for the next month or two. If we close above 203.42, we're just probably a month, 2 at the most, from pushing into a significant zone of resistance that I don't show the math behind, but they are wave counts that may well contain quarterly buying pressures. Downside, if we were to close below 175.48, that is a go with sell signal into the second quarter. The next 2 to 3 to 5 months or so at the most, 126.86 then expected. And this 126.86 is trend support for NVIDIA, really through the year and into later decade. This is the last channel bottom. This is the most significant channel bottom you can create on a weekly chart, and it is trend support. In other words, our long-term trend remains bullish above 126.86. Our midterm trend remains bullish above 175.48. And if we can close above 203.42, we have a near-term 3 to 5 week trend that pushes into the 219 to 228 region. Finally, Palantir, not part of the Mag 7, but we get a lot of requests for it, so we included it. There's a channel bottom here that goes back to April. This is an 8-9 month channel bottom. Once again, has been held here, and roughly did hold a couple of weeks ago. We came close to testing it. 170.42. Big picture. Holding above 170.42, you must allow for full upward rotation into this 247.96 and climbing channel resistance. That is the channel dynamic at play. We don't have a buy signal on strength, We're just sort of plodding along this channel bottom. I will say if we do close this week below 170.42, we have, I'm going to call this a 3 to 5 week sell signal down to 137.69. And over the next 3 to 5 weeks, that puts us into later February, it will be converging roughly at that time with this extreme rising channel bottom that is a targeting mechanism. So as this area converges in later March, it becomes a single point. But for right now, closing below 170.42, expect 137.69, where we could bottom out actually on a monthly basis and even turn up from there. Holding above 170.42, I see no compelling reason to exit a Palantir trade or position. Let me move to the last chart and just show that you've got a high settlement of 200.47 and you've got this channel top at 211.54. Holding above 170.42 will keep 211.54 in reach by the end of February, where we can place a weekly, possibly monthly high. We could fill this wedge out for a month or two, but just know that of the two, 211.54 is likely to give way to the upside just because it does not span the amount of time that 170.42 does. Closing above 211.54 is your indication to go long on strength the following month, two at the most, and likely to continue up to this 247.96 channel top, where we just might place an annual high. I think that pretty much rounds it out. I'm past 15 minutes. I'm going to leave it at that. I'll be back next week with another Mag 7 update, and you have a great week.